Hello, property navigators. The National Housing and Affordability Council released a report stating that Australia needs 871,000 new households by 2029. That's hundreds of thousands more houses than what is built on average. When there is supply and demand gaps, there is opportunity for investors. So we're going to cover off Australia's supply and demand landscape and 4 key market dynamic indicators you should take careful watch of. You're probably sick of hearing me and every other person saying property is all about the balance of demand and supply. But is it really that simple? Think about it. When it comes to investing in anything, whether it's the stock market, gold, silver, baseball cards, fancy watches, or even old sports cars, the value of an asset is determined by supply and demand. This chart on screen from CoreLogic's head of research, Eliza Owen, visually sums up demand versus supply and why the different property markets in Australia are performing the way they are. I'll take a moment here to explain how to interpret this graph. On the vertical y-axis, we have the change in total listings from historic 5-year average as of the 2nd of June, shown as a percentage. On the horizontal x-axis, we have the change in home values in the 28 days to 2nd of June, also shown as a percentage. At one end of the spectrum is Perth. I'm sure you've all heard about how hot the Perth market is right now. Perth has total listings sitting at 45% below its average stock levels and a monthly capital growth rate in values of 1.8%. So prices are going up because there simply isn't enough supply to meet the needs of those buying over there. At the other end of the spectrum is Hobart, where there are 39.5% more listings than the historic 5-year average for this time of year, and as a result, home values are 0.5% lower. The additional supply in stock across areas like Victoria and Tasmania means sellers must bring down their price expectations, and that brings values down. This basic supply and demand equation is where professional property analysts start their assessment. Then, any other unique aspects and dynamics driving individual markets are added in, such as a coastline lifestyle or the availability of top-tier schooling options being just a couple reasons that may increase the demand of a specific suburb. More broadly, lower property price points across Perth, Adelaide, and parts of Brisbane and southeast Queensland continue to drive buyer demand, even under high interest rates. Interstate migration remains particularly strong in Queensland and Western Australia, and income relative to home values, i.e. their affordability, is also more reasonably matched in Perth. On the supply side, there has been more of a build-up in new listings than usual across Victoria, even where home value performance has been relatively soft. Victoria has also had more new dwellings built than any other state and territory in the past 10 years, keeping a bit of a lid on price growth. And I hear you ask the logical question, isn't the quickest solution to our housing crisis to build more homes? Well, the problem when it comes to building more homes is that we can't magically create more land in the places people want to live. Think about it, land in our cities has already been bought and sold and possibly even developed over and over again. So in most of our cities, there simply isn't more land. And this is why you always hear me say land content is king when you are buying property. We always maximize land content for our clients in their purchase because that is the portion of the asset that increases in value. Dwellings get older and they depreciate in value and need more money spent on them over time for maintenance. But the land portion of the deal, when bought in the right areas of course, is the portion that continually grows in value. And now I hear you ask, is it the quickest solution to our housing crisis to build more units? There is always great local debate about changes in council zoning laws to allow construction of apartment complexes. Now, many people don't want to see their suburb of traditional housing blocks changed into medium or high density housing. And a lot of people don't really want to live in apartments or units, especially when they have kids. But this graph on screen shows the size of the average Australian household, which has dropped significantly since the 1980s. So the question could be asked, why do we need the traditional 3 to 4 bedroom house on a really big block when on average we only have 2.5 people living in the property? And compared with the rest of the world, Australia has very low levels of housing density, whereas in London, Singapore and Hong Kong, more than 80% of homes are either apartments or townhouses. Sydney has just 46%. Hobart has extremely low levels with just 15% of all homes being units. Comparing London to Hobart may seem unfair. Even comparing our cities to smaller cities around the world, our densities are extraordinarily low. In the US, the least dense small city in the country is Norman, Oklahoma, and even there, close to 35% of homes are units. The reality is that we're going to have to get used to living with more density to achieve supply in the future. Think of the Australia in 100 years' time. We aren't all going to be living in houses at the rate most of us are now. There's absolutely no way. We can't create more land in desirable suburbs, but we can build more dwellings if you build upwards or build homes closer together. We also don't need to keep building bigger homes as household types are changing and will continue to shrink. This leads me again to why land content is king when buying your investment property. Firstly, just think about when it comes time that zoning is changing in the areas that you have invested into, so that more higher density housing such as units can be built. And this will happen in time. It has to for supply to meet Australia's future demand. The more land you have means that you may be able to develop a unit or apartment block yourself or sell to a developer for this purpose. Minimal land sizes will be mandated for these development types to take place, so be forward thinking. Secondly, new analysis of all residential properties across Australia's three largest capitals, Sydney, Melbourne and Brisbane, has identified more than 655,000 sites suitable for the construction of a granny flat, offering a solution to help ease the housing shortage. So although we aren't building density as required to solve our supply issues, investors can help meet supply themselves while bringing in quite the high yield from the asset. But you need the right block sizes to be able to do this. Minimum sizes apply to different council areas. Granny flats can cost around $150,000 to $200,000 for a beautiful design that is very desirable. Depending on your region, this could rent for $350 to $450 per week or more. So you're looking at a 10 to 12% yield. Check out the link for our video specifically on this just down in the description. So remember, when you are buying your investment property, get decent land content now if you can, as later on the odds are stacked in your favor that development will come. But where and when you buy will play a big role in your success. As I mentioned earlier, there's 4 market dynamics you should understand during your research stage before investing in any suburb. Market dynamic number 1, interest rates. Rising interest rates often slow down buyers in their tracks, and it makes financing property more expensive. This cooling effect can dampen property values in the short term, but also opens a window for those who are prepared to buy when others are sitting on the fence. It also increases demand in more affordable locations, and this can be seen in the data from CoreLogic, which shows twice as many properties selling in the lower 25% quartile than the upper 25% quartile of property values. Market dynamic number 2, inflation. On the other hand, inflation typically indicates a rise in property prices as the cost of goods and services increases. In Australia, this has certainly been the case. Even when wage growth has failed to keep up. Market dynamic number 3, higher employment. This suggests more potential home buyers are in the market, pushing demand and prices up. And market dynamic number 4, infrastructure developments and regional market trends. Government spending usually indicates a strong belief in the area's growth potential, which often triggers a domino effect. Private investments follow, enhancing the area's appeal and value. This improvement in infrastructure can attract more residents and businesses, which in turn boosts the local real estate market. Obviously, this must be kept in context with the broader market dynamics and should not be the sole reason for investing in a particular location. We have a whole video on this topic, and you check it out here. Until next time, happy property navigating.